Welcome to the CFD Weekly overview of the global financial markets. The euro is in free fall against the dollar, with the euro-dollar currency trading at a two-year low. Weak inflation data from Germany worried investors that the eurozone economic engine may be on its way to recession, which put pressure on the European common currency. The British pound is still under pressure as Brexit uncertainties remained high as the UK Parliament reopened last week after its temporary closure was ruled unlawful by the Supreme Court. Bank of England Monetary Board member Saunders said that it was quite plausible for the Bank of England's next move to be a cut. The Japanese yen weakened as the industrial production contracted more than expected in August, data showed on Monday. Overall, the dollar index moved sharply higher after a slew of economic data pointed to disparities between the solid state of the US economy and weak economic performance of the rest of the developed world. Gold prices fell sharply as risk-on sentiment prevailed, and yields on US government bonds continued to rise. King dollar also put pressure on gold prices. US stock indices were little changed. A plan reported by Bloomberg that the US was planning to stop Chinese companies from listing on US exchanges weighed on indices. However, the White House later denied such plans, and markets looked forward with optimism to next week's top-level trade talks between the US and China. Crude oil prices fell sharply as Saudi production capacities were fully restored to 11.3 million barrels per day. In addition, concerns about slowing global economic growth amid an ongoing US-China trade war with the United States weighed on crude prices. However, this week reports that OPEC, the US and Russia's output, fell in July and August has supported crude. You've been watching the CFD Weekly overview of the global financial markets.